some kind of a recession as well. Catherine, I think you're right on. But Mike, look at these jobs. January, 517,000 jobs created. A lot of people do not believe those numbers. They think we're going to see a sharp slowdown and a reversal, a revision for the January number. You got Airbnb laying off 30% of its recruiting staff. Companies planning to expand modestly this year, it says. The stock is up 47% year to date. And this morning, as you can see, it's sitting at 125.73. You've got Amazon pausing construction on the second headquarters in Virginia. They also, by the way, closed 8 Go convenience stores in an effort to cut costs there as well, after the company began laying off thousands of workers last month. That stock, by the way, is up 12% year to date, Mike. So it looks like when these companies announce layoffs and cutbacks, the stock actually responds positively. So we're waiting on the February jobs report. We get the ADP number out on Wednesday. We get the February jobs report out on Friday. What do you expect, Mike? And do you think we're going to get a substantial revision in the January number?
Yeah, I don't know about a substantial revision, but I think the assumptions that the statisticians at the BLS, the Bureau of Labor Statistics, are using to compile these numbers are just wrong. I think the labor force has changed dramatically in a post-COVID world, and I think these numbers of jobs that were coming in, it just can't be relied on the way that it used to. And historically, there was always a margin of error in all of these data points that come out, but you could compare, say, August of 2018 to August of 2015. I don't think you could do that right now. I think they're trying to figure out their seasonal adjustments on top of the assumptions that go on in their model. Because in December of 2019, we had 154 million and change workers, and now we have 155 million, yet somehow we've added millions of jobs, and we've had 3.4% unemployment rates, even though the labor force grows by over 1 million workers a year. So how 3 years later can we only have 1 million more people working, yet the unemployment rate remains so low? So I'm taking all these numbers with a grain of salt, and what we're seeing out there is a little bit of a resurgence in the economy, and that's a lot of that has to do with the 8% hike in Social Security, as well as tax brackets being bumped up because of inflation adjustments. That equates to a $350 billion stimulus from those cost of living adjustments. And so, as Catherine has stated, I'm in 100% agreement. The only way inflation gets under control is with the recession. And the longer we wait for that recession to come, I think the more violent and more dramatic it will be, simply because the Fed will have to do more and more and more to break the back of the economy to get inflation under control. Remember, inflation is not only a markets killer and a economic killer, it's also society killer. So without a massive economic contraction, how are we going to get back down to 2%?
That's right. So, Mike, real quick, are you doing what Catherine's doing? Are you raising cash? Are you selling, or are you a buyer of stocks here?
Yeah, so I own the defensives, I own gold, and then yes, the number of calls I'm getting for people to talk to me about short-term treasuries and getting 5% for very short-term cash, just like, I haven't fielded these calls since 2006 and 2007, so it's a really interesting time, and I'm definitely buying a lot of short-term treasuries as well.
All right, we'll leave it there. Great win on Wall Street, guys. Thank you. Catherine Rooney, Vera, Michael Lee, we will see you soon. Quick break. Much